picture the scene. You've just started investing, you've put a big lump sum of money into the stock market because you think, well, you know, I've been told that by all these people and Warren Buffett's made a load of money in the stock market and I want to grow my money. So you put all your money in and you think, yep, happy days, I'm good to go. And then suddenly there's a big drop and you're 20% down, you're 30% down. What do? How does that make you feel? Does it make you want to cash out, get rid of your money, put it into a safe storage place, put the cash under your bed instead? Well, this would be you acting in an emotional and irrational way. And this is something which has happened to my lifetime ISA, which I'm going to talk about today. And I'm going to show you how emotional investing, or how to avoid emotional investing in practice. So a little while ago, I made a video where I showed that I've put my entire lifetime ISA balance into Palantir. So this is a tech company, but I've put it into like the 1x shares. So it's like basically they try and synthetically match the 1-to-1 stock ratio, but it's a lot more complex than that, but I won't go into it. And if you want to find out about it, you can do some research. But basically I did that because Palantir shares were not available with the provider that I was using at the time. That being said, I put all my money into Palantir because I do believe that they are a good long-term pick. However, you may be wondering, well, a lifetime ISA, you use that for buying a house or something like that. Well, yes, that is true, and I'm hoping that my lifetime ISA will be ready to use in 5 years. So you could argue that this is a risky decision, and yes, it absolutely is, because putting all your money, a YOLO, into one stock is probably not advised unless you have a high risk tolerance, or unless you are super confident or have a big ego, and you make your decision as to which of those applies to me. But this sort of move you might see more on wallstreetbets or something like that. I mean, people do all sorts of silly things on wallstreetbets and on Reddit and on the internet. Who knows how many of these are true? However, in my case, as I said, I put all of my lifetime ISA balance into this one stock because I believe that over the 5-year period that it will increase in value, and I'm hoping that it will increase enough that it warrants me putting it in there as opposed to just leaving it in an index fund, or even just leaving it into a cash lifetime ISA. Because before, what I had was a cash lifetime ISA which was getting me the returns of about 0.25 or 0.5% or something like that, and I wanted some bigger returns. So as I'm recording this video, I put this balance into my lifetime, or into this stocks and shares lifetime ISA in September. So this is about 2 months ago that I finished this and completed it, and for a time it was going very, very well, and it was up about 10%, which was around 1,500 up at one point. However, as I'm making this video, the Palantir stock price has gone down severely over the past kind of couple of week or so, and it's now sitting at negative 17%. So this means that on my lifetime ISA balance that I'm down £2,500. Does this concern me? Should I be concerned? Am I going to sell all my portfolio and realize the loss and put it into cash and store it somewhere safe? Absolutely not. And you may say, well, why would you do that? Like, surely that seems like a more logical thing to do. If you're losing money, then why would you keep it there? That doesn't make sense. And you may be right. But personally, this is where it comes to that emotional side of things. And if you were to purely look at this from an emotional standpoint and purely from a right here, right now standpoint, then yes, I would not be in a great position, and selling now would not be very good, and I would have lost £2,500 of money. However, this is not the way that I'm going to do it. And because I'm not going to use this money now, I'm going to use this money hopefully in around 5 years, when hopefully the stock price will have had time to grow. And also, it's not like this is my sole investment. I will be adding to it year on year. So yes, the stock price is down for now, But over the long term, I mean, realistically, 5 years is not necessarily super long term. I'd say that's more medium term, but that's the amount of time that I'm planning to hold this investment for, a medium amount of time. And over that period of time, there's going to be fluctuations. It's going to go up. And because of the nature of the company, because they're quite a new company, because they're a bit of a tech company, it's probably going to be more volatile. And this is what I was prepared for when I initially set up this investment, and what you may not necessarily get if you were to invest into a broader index fund. So I guess the reason I'm making this video is, one, to kind of show the impact of emotion on investing, and how if you're prone to emotional investments or letting your emotions get the better of you, then it's probably better to stick to something passive like an index fund where you don't necessarily have as much control, or to ensure that you do enough research so that you are very, very confident in the things that you're picking and the investments that you're making, that you believe in their long-term vision, and that if something does change, then obviously change your investment, sell it out or change it into something else. But as long as you believe in that investment for the long term and the reasons that you've invested in that one stock or that one company are correct and they still hold true, then you only lose money when you realize the loss and when you sell it. There will be fluctuations. There will be times where the stock price is a lot higher than it was when you started, and there will be times where the stock price is a lot lower than it started. And quite often the adjustments and stuff daily over the short term are minor, a couple of percent, 0.5%, something like that. But even when you do get a more major one, bear in mind that this is a long-term game, and it's nothing to do with the short term. The price does not necessarily matter until you're nearing the time when you're going to be using it. Unless something fundamentally changes about the asset that you're investing in, the price over the short term does not matter. Do not let your emotions get the better of you. And so I want to finish this video by saying, yes, right now I am down £2,500, and some people, call me stupid in the comments if you want, I don't care, put it in there. I want to put some comments saying, you know, you're silly for putting all your money in one place. I'm absolutely fine with that. We'll see how it pans out in 5 years. I may be laughing, I may not, but all I know is that it's likely that the price will be a lot higher than it is now, and also that I would have got better returns by doing what I'm doing than it would have been by putting it in a cash lifetime ISA. But yes, there would have been the security, and I don't have the heart attacks by using a cash lifetime ISA, but this one gives me the thrills and hopefully the better gains. So what are your thoughts when it comes to emotional investing? Is this something that you've already learned, or is this something that you're going to be learning and planning to implement and to use in your investing life? Let me know in the comments. Other than that, like, subscribe and all that good stuff, and I'll see you in the next video.